real estate is eventually going to collapse relative to Bitcoin. The greatest assets are the ones that you do not have to maintain. And I've been working in Bitcoin since my sophomore year of school, and I haven't looked back. The demand for this thing is clear, and there was a lot of pent-up demand from these different cohorts for Bitcoin exposure, but it's been consistent. It's this pattern that just wasn't present in 2021, 2022. Bitcoin has just been grouped in with assets that it has nothing to do with. I believe that over time, because this has been the case, Bitcoin's cross-asset correlations to the stock market, particularly the NASDAQ and the Russell and then the S&P, and Bitcoin will become the least correlated asset in the history of asset markets. And so that's why you see such consistency in Bitcoin's price. Those two factors. I guess three: the size at which they're allocating, the type of allocators, and the fact that they're long-term holders, and also the type that this effort is scaling, is that this is like different than anything Bitcoin's ever done before.
Give us some background and overview of who you are and why you're excited about Bitcoin.
Of course. That's awesome. Well, again, thanks, Robin, for having me. My name is Joe. I am the head of growth over at Horizon. More than anything, I'm a Bitcoin advocate, and I suppose Bitcoin salesperson, you could call it. I think anybody working in Bitcoin to some degree is a Bitcoin salesperson. So I'm just another one of those guys, right? I'm a market analyst by trade. That's kind of where I got started. Recent college graduate, 24 years old, and I've been working in Bitcoin since my sophomore year of school, and I haven't looked back. I helped found the Bitcoin layer, or rather turned it into a market research publication, multimedia publication with Nick Bhatia. I've been the head of growth over at Seyr for a little bit over a year now, and now I'm working the same position over at Horizon. Yeah, a little bit about me. Excited to dig into everything we have to talk about today.
Awesome. Yeah, it's really fun. I think you've been on, I think like 8 months ago. Like I should have looked it up, but like I found like half a year to a year ago, and the price was probably about like half of where we are right now, depending on when we release this video and all those things. How different would you describe the market a year ago to now when you're back on? What do you kind of see in the market?
For sure. Yeah. I mean, looking back a year ago, and a lot of people will forget this, but we were right smack dab in the middle, if not a little bit toward the end of like a consolidation phase for Bitcoin. So I think what I can do is show my screen, and I'll show people this chart, just so people can get some sense. I'll do away with the moving averages, and I will take off the indicator there. So zooming out to right here, this is where we were last summer. If most people remember, we called this phase chop solidation. Why? Because everyone thought Bitcoin was going to break out every single time we reached here. And then everyone thought that Bitcoin was going to tank every time we reached here. But in reality, it was just coins changing hands from weak hands to strong hands, right? The ETFs launched early last year. Last summer was a huge example of coins being sold off by some flighty retail investors and purchased by more long-lasting entities that have a longer time horizon. Now compare that to this summer, we're in a very different position, right? So, if you go back to July 21st of last summer, somewhere around here, Bitcoin was about 60-ish K, high 60s, right, to low 60s. Now we're basically double that. So, exactly as you said, it's a much different world. Bitcoin has taken two massive legs up since then. Obviously, this trend here, if you could visualize it, we've broken up and out of that trend. Bitcoin went down to, it created some volume here, went down to retest and create some more volume, and then shot back up, created some volume and then shot up, and now we're creating some more volume. And so really, the story of this bull market, Robin, and for the people viewing at home, is that this is like different than anything Bitcoin's ever done before. So really, if I put this into log scale, you'll be able to see it a little bit better. Is that, Bitcoin for the last 3 years, right? The majority of this cycle has just been, consolidating, taking a stair step, consolidating, taking a stair step, and so on and so forth. And so really what we're seeing is like a very, very mature and slow and gradual increase in Bitcoin's price that much more, mirrors like stair stepping secular adoption of an asset rather than the hysterical booms and busts of cycles past. I won't go all the way back to 2017, but if you go back to 2017 for comparison, you can see Bitcoin spends basically 2 years of the 4-year cycle being flat and doing nothing. 1 year shooting up, 1 to 12 to 14 months shooting up as fast as it can, and then the next 12 to 10 months, cratering back down basically by 60 or 70%. And that's just not what we're seeing this time around. You'll remember in 2022, in 2023, Celsius, BlockFi, FTX, Voyager, and a great deal of others, they exploded off the map. And that was around the time when yield was a huge thing, when other crypto was a huge thing. And now we're seeing that that's just not the case with Bitcoin, right? Demand has moved into Bitcoin. If you look at the price charts of Bitcoin relative to everything else. So really what I mean to say, to tie it all up in a bow, is like, where were we last year? Where are we today? A long-winded way of answering the question. Last year, we were consolidating before moving higher. Right now, we are consolidating before moving higher, right? That's the new modus operandi of the way Bitcoin operates. That's the new path of least resistance for Bitcoin. We're moving away from these boom and bust cycles of yore, and I'm not saying we won't have a bust this cycle, but the reason we're doing it is because the people who are buying Bitcoin are no longer retail dominant. They're primarily institutionally dominant. Pensions, endowments, and others who don't plan on selling anytime soon. And so therefore, you're getting a lot more consistent, stair-stepping, mature adoption. That's what you're seeing in the price, rather than this sort of crazy boom and bust cycle type stuff.
I love that because it mirrors what I've been feeling just with my gut, where I'm like, okay, we have a lot more big money coming in. At the same time, retail seems not that excited about Bitcoin right now. Like if I go out, there's here and there some old friends that call me and message me, but it's like nothing compared to 2017 when I was not even Bitcoin, but everyone was talking about Bitcoin. And it was my first kind of touch point with it. 2021 was crazy. At every smaller gathering or any party, there was talks about meme coins, about Bitcoin, about all those things. It's no longer happening in that crazy sense. I mean, that's just like my very small subjective feeling. But back then I did not work in Bitcoin, and it came up more. And now I work in Bitcoin. It comes up less in my personal life. So I don't know. It's just one man's opinion. But the retail crowd seems to be like chilling out and not be so excited about Bitcoin, but the price is crazy high compared to where we are like 1 year ago or like 5 years ago. And it's just like the bigger money coming in. And I actually just looked, because I was curious, I didn't look at that chart for a longer time. The retail chart is always like, if you put in buy Bitcoin in Google Trends, you're probably well aware of that. And then it actually has a small uptick here, and comes a little bit where we were when we hit the 100K last year. So I don't know, maybe retail is joining us again. But even if retail is not joining us, or even if they join and then like drop out again, the big money makes kind of the move, right?
Yeah, exactly. And so I completely agree with you. Like before I was even working in Bitcoin, more people talked about Bitcoin and other, altcoins and meme coins and whatever. Now I don't hear a peep, and I work in the industry. Maybe it's just because I'm staying on my desk more because there's more work to do, right? But largely, it's not nearly as present as it was last cycle. That can be validated with other anecdotes, like your anecdote, which lines up with mine, which lines up with other people's, but also Google search trends, right? And so, you see them trending up just a little bit. If you search Bitcoin, just flat out Bitcoin instead of buy Bitcoin, I think it's even lower than the buy Bitcoin. And so retail is coming onto the scene at the margin. But that doesn't necessarily matter, right? Because the cohorts that have driven this buying have been these institutions, right? This is because of two distinct things, or three distinct things rather. Like first being these ETFs, right? These spot Bitcoin ETFs allowed an entirely new cohort of investors to invest in Bitcoin. If you consider pension funds and endowments, and retirees with their 401ks, whatever, none of these people had access to Bitcoin unless they wanted to take the money out of the account that they were using for the rest of their portfolio and get hit with a penalty. And for them, it wasn't worth it, right? They would buy MicroStrategy, or they would buy a Bitcoin futures ETF or something else. Then the spot Bitcoin ETFs came online. You fast forward 16 months later, 18 months later, year and a half later, IBIT is BlackRock's most successful ETF launch of all time. It's their most profitable ETF of all time, just 18 months in. And so the demand for this thing is clear. And there was a lot of pent up demand from these different cohorts for Bitcoin exposure, but it's been consistent, right? It hasn't, it didn't kind of come onto the scene over the course of a couple months and then wane. And then these people are just holding or even selling. There are more and more and more of these people every single day who are purchasing this for their pension, their endowment, whatever, their retirement account. And another thing to consider, and this is key, not only are they long-term holders, because when you're buying something for your pension, right, chances are it's going to stay there because as people retire, they are going to take a slice of it, right? You're not going to trade in and out of things. You're going to hold assets that will appreciate over the long run so that you can pay, whether it's a COP or whatever, their pension, right? This is a cohort of buyers who are long-term thinkers. Not only because of that, but also when you consider when a business does something profitably, what do? They scale up their sales force to hire more salespeople to sell it to more people, right? BlackRock coming out with this news that IBIT, their spot Bitcoin ETF, was the most profitable ETF of theirs of all time. That means that they've hired more salespeople or they've ramped up the sales effort for IBIT to their clients, right? And so there's genuinely a Bitcoin marketing department out there employed by BlackRock, Fidelity, Galaxy, and others. All of these people who have these spot Bitcoin ETFs, they are essentially this Bitcoin marketing department, right? When you think Wolf of Wall Street, cold calling people, selling them penny stocks, it's a little bit different, right? Because obviously these are, institutional allocators who buy things on behalf of their clients. However, there are now massive teams of sales forces all around the world in every single time zone who are calling their client list to talk about IBIT or talk about FBTC or talk about any number of other spot Bitcoin ETFs. So like, Robin, you're doing what you do as a Bitcoin podcaster. I try to do what I do as a Bitcoin podcaster and video guy. We are Bitcoin salespeople, but the folks at Fidelity and BlackRock who are trying to sell this ETF to people, they too are Bitcoin salespeople. They're motivated more so by profit rather than, the Bitcoin ethos, but all the same, they're Bitcoin salespeople. And so that's why you see such consistency in Bitcoin's price. Those two factors, I guess three, the size at which they're allocating, the type of allocators and the fact that they're long-term holders, and also the type that this effort is scaling because these vehicles are so profitable for the companies issuing them. And so they're selling to more people.
It's super interesting. It's kind of the first time where Bitcoin has a professional sales force and marketing budget. I mean, yeah, we always had a sales force and we're getting orange pilled. We are telling our friends and families about it, which is the most important thing. But those are people that actually sit down and call people and go about strategically about that. And they are selling Bitcoin. I always find it funny when we call ourselves salespeople because we are not selling Bitcoin. It's an interesting thing. But it is changing the market behavior, I guess, for Bitcoin. I'm wondering a lot what implications are there. And I know we have probably in every cycle to talk about super cycles, about the cycles changing, about, maybe we don't have the down year and all those things. But this time around, it really looks different. I mean, it has been said probably the last 8 years and 12 years also. But this year, it seems with the bigger and bigger influx of money and also more this stairways kind of a approach, maybe we don't have that blow off top, but then also not the crash down. Is that reasonable to think that we just slowly getting adopted and slowly kind of maturing without those crazy volatile cycles and down years?
It certainly is one way to look at it. And I'll actually, while I'm saying this, I'll work on pulling up a weekly chart to demonstrate what I mean here. But because we're spending so much time at each one of these levels, and because we're really making people bored and there's so much volume at each one, there was so much volume at 60K before we moved up to 90K. There was so much volume there before we moved down a little bit, right? And then because we moved down a little bit, the only reason we did was to create more volume. And then we moved up, created volume, and moved up again. And so it's this pattern that just wasn't present in 2021, 2022. I will show my screen here to showcase kind of the difference. Honest to goodness, these two charts look like these two sides of the chart look like totally different assets. This is 2020 through 2022. And then this is 2023, 2024, and today. So you can see here from September of 2020 all the way through February of 2021, basically 5 months straight, or you could say 7 months straight, all the way through April. It was basically just nonstop rising for Bitcoin. If that had been the exact same case over here, Bitcoin would have hit its top in August of 2023. Instead, in August of 2023, Bitcoin was at $29,000, right? And what did it spend the summer doing instead of rising and ripping through the stratosphere like it did in 2021? It spent the summer making people bored, right? And then it moved a little bit higher throughout the fall. Again, it moved a little bit higher into the early summer. And then what did Bitcoin spend its summer doing? Making people very bored, right? Every time you see Bitcoin range sideways here, that's building up a strong and firm foundation in case Bitcoin crashes through any one of these floors, right? So the more time you spend at a level, the more familiar people are with it, right? The more people's average cost basis, their buy-in price, their purchase price is at that level. And so therefore, the more solidified that level is as a level that Bitcoin could bounce off of should it crash, rather than crash directly through it. So that's what you see when an asset is maturing. It's spending a lot of time at these levels before ascending higher, and in doing so, like not only is the front-facing Bitcoin behavior suggesting that chances are there's a low likelihood of a huge blow off top this cycle because it's not ascending through the clouds, it's taking its time. But also because we're taking our time, it makes it so that should Bitcoin fall, chances are it won't be this typical 60, 70, 80, or even 50% Bitcoin crash because it's spending so much time at these other levels. It represents a lot of people's average buying price, and therefore they'll be more than willing to step in at those levels or above those levels to make sure that they don't lose money, right? To make sure that their profit isn't negative. And so that's a fundamental difference. You can see here, right? We spent no time here, no time in this region, and that's why you saw it channel around a little bit, and then it ended up crashing, right? It channeled around a little bit, and ultimately, we created volume here. Over the course of, basically almost a year, we created volume here, or 6 or 7 months. We created volume here, but then ultimately there was nothing here, right? This entire zone had nothing going on in it in Bitcoin's entire history, basically. And so it cratered, right, until 20,000, which was a level that it spent some time at over here, and in 2017. And so it's all about like how familiar are these levels, right? In 2021 and 2022, it completely crashed after it reached these levels because the market got over its skis. It was pumped up by retail fueled leverage and speculative mania, and then it cratered back down to the ground all the way through every single consecutive level that it hit along the way because it spent no time there. This time, it seems a little bit different. It seems like because of the way the market is rising during this cycle, because of the time we're spending at certain levels, the market's behavior suggests to me that there may be a lower likelihood of a blow off top. And a subsequent huge crash this cycle.
This just reminded me that when we had in the past always those crashes, and they always kind of got triggered by something like an FTX or people getting leveraged with Celsius and what was the BlockFi and the other platforms. Do you see that this could be a risk? I personally see more and more people getting in, like borrowing against the Bitcoin and leveraging against it and taking out personal loans for like short term and like high interest rates and all those kind of things. Where I'm like, I don't know, like the trend towards doing the Seyr strategy, which is not really the Seyr strategy because he gets long-term loans and like very low interest rates. And then all I see online is like high interest rates and low duration loans. But do you see that this might become a problem? I don't think like it's too overheated right now, but like it could become a problem if the price is more rising and people kind of FOMOing in and like, oh, I also want to get to half a Bitcoin, but I only have like 10,000 euros and half a Bitcoin is like, I don't know, $80,000. Let's just borrow it and like do it that way.
Right. So there are always risks, right? And it's good that you brought up BlockFi and Celsius. And the one thing to get across with what those platforms allowed people to do was essentially it allowed them to post their USDT or their Bitcoin or another token, right, as collateral. Allowed it to basically, like these platforms were marketed, their yield products were marketed as a black box. You put your Bitcoin in here and then more Bitcoin comes out of it. We're not going to tell you what happens inside the black box. That's our that's only our information. But as far as the customer knew, there was a black box. They deposited Bitcoin into it, and then more Bitcoin came out. And so ultimately what was revealed was that basically they were using customers' money and then lending it out to extremely risky borrowers, just like a high yield, just like basically a bucket shop, like an extremely high risk bank. That's what these customers were doing. Basically, these customers, you tend to see like 12% rates on Bitcoin backed loans. Basically, during the 2021 and 2022 cycle, these customers, these platforms were the lenders. They were on the lending side of that. And so then it blew up spectacularly in people's faces. And now that's not to say these platforms were, basically extending Bitcoin backed loans. I don't believe they were. A lot of it was using that borrowed money and then going and speculating on it in the market. A lot of it was, lending to somebody who's an extremely high risk borrower with low likelihood of paying you back. Think of it this way, right? Like if the risk-free rate in the market right now, the U.S. Treasury rate is proverbially risk-free. Obviously, there's inflation risk, but from the standpoint of default risk, it's zero. In nominal default risk, you consider the risk-free rate at like 4.5% right now, and you see, FTX offering 15%, or whatever. Where is that 11.5% coming from? Why is there 11.5% or 1,150 basis points more for giving my money to FTX than there is for giving my money to the U.S. Treasury? That's the risk premium associated with the type of contract you're entering into, right? Loaning money to FTX so that they can then go loan it out to somebody else has a risk premium that's worth 1,150 basis points over the risk-free rate. When the risk-free rate is current, I'm just taking these examples. And so it was an extremely risky endeavor. Customers didn't know what they were doing. This wasn't being marketed accurately or in good faith at all. It was extremely deceptive. That said, we fast forward to today. All of these bucket shops have kicked the bucket, per se. BlockFi is no more. Celsius is no more. FTX is no more. So on and so forth. Those yield schemes are fewer and further between, right? You still have the Coinbases of the world who are talking about earning 5% or 6% or whatever on USDT. Okay. That's not nearly as, that rate suggests it's not nearly as risky as what FTX was offering. It's only about 250 basis points over the risk-free rate. So you still have some people here and they're doing it. But like you mentioned, the prevailing trend is Bitcoin-backed loans. Like doing a Seyr strategy, like you mentioned, requires intelligent leverage, right? In order to speculative attack the dollar by buying Bitcoin. That's it, right? The Seyr trade is doing a carry trade. It's borrowing in a low interest rate currency, right? Or borrowing at a low interest rate in a currency, either one or both, which is the case with the US dollar. And then using that capital to invest in a higher yielding or a higher rate of return asset. That's Bitcoin, right? So, this has been done through centuries and millennia, but the most popular carry trade today, particularly in the United States, or a growing, a trade that's growing in its popularity is this Bitcoin US dollar carry trade, where the sailors of the world are borrowing at essentially 0%, right? They're doing this, these convertible bonds at 0%, in these preferred stock offerings at a really low rate. And then they are using that capital to invest in Bitcoin. It's only profitable because on the front end, the rate is basically zero. It's essentially free money. And therefore, there is very little, if any, liquidation risk, price-related liquidation risk on the BTC. If anything, the price-related liquidation risk is very low because of the rate that they borrowed at, right? You take a look at Bitcoin-backed loans, it's kind of the opposite story, right? You need to post quite a great deal of collateral on one side. And then on the other side, your Bitcoin is open to liquidation risk. And then to top it all off, you're going to be paying like a 12 or 13 or 14 or 15% interest rate instead of the 0% rates that Seyr is doing. And so ultimately, that is not, in my mind, intelligent leverage, right? Intelligent leverage is ultimately leverage that comes with low or no price-related liquidation risk for Bitcoin, right? Low or no Bitcoin-related price liquidation risk, right? Because what that allows people to do, and then you pair that, so the definition of intelligent leverage would also include a low rate, particularly a rate that is lower than the rate of inflation. if you have those things, even if you just have, a rate that's lower than the Bitcoin appreciation, that's fine. But you still get into the danger of Bitcoin related price liquidation risk. So using intelligent leverage, like public companies can do it. Dudes with huge balance sheets can do it. They can get better terms at a bank for, like an asset backed loan, for example. But like Bitcoin backed loans in their current state, in my mind, are not intelligent leverage, right? And so people do have to be careful, right? I will say that these are far fewer and further between. Whereas during FTX and Celsius, it was the promise of free money. This time it is, the terms are basically upfront. Look, you can have a Bitcoin backed loan, but you're going to pay me 12%, right? Rates starting at 12% APR. It's all over the place, right? So the risks are far more apparent. I think people are being far more prudent with it, even though there's been this rise in Bitcoin backed loans and this rise in Bitcoin adjacent credit products and debt products. I do not believe that people are over their skis like they were in 2020 and 2021, at least to the extent that they were, because of what was being offered then, the types of investors involved then versus what's being offered now and the types of investors involved now. All that to say, I don't think it's as big of a risk because of the different dynamics, right? The Bitcoin audience is on a different side of the trade now. They are lending money and paying 12% rather than putting money into a black box to receive 12%. So that's essentially kind of where I'm at with my mental model on this.
I like that. And then that difference is really important of like lending money to get a 12% versus like borrowing against your Bitcoin. And I agree. I haven't found a product where I gladly give up the control, because that's the next thing. You give up control of your Bitcoin. Like, you don't want to do that. People always make the comparison with real estate, with stocks, with equity of shares, but there you anyways don't really have control of it. So like,
Yep.
If you have stocks there in a stock portfolio, you can get locked out at any time. With Bitcoin, this is actually like your physical thing, and you hold it, and nobody can take it away from you outside of they are torturing you or killing you. And even then, you have the chance of saying like, "Oh, it's mine. Sorry, I won't give it to you." This is where I see a lot of the difference of borrowing against the Bitcoin, because Bitcoin is just like a physical bearer asset that's digital,
Yep.
which we never really had in the history. With real estate and like all those other things, it's a whole different story.
Yep.
So do you think that we will get to a point where borrowing against Bitcoin is just like such a no-brainer because you can do it in a very safe way? There are like tested, mature products out there. It's like a low, similar to real estate, like low interest rates and all those things. Do you think we'll get there?
I do, and I think this plays into Bitcoin's journey on kind of on this monetization trend. If you look at Bitcoin today, it's a $2 trillion asset in a $1 quadrillion market. If you do the total global asset value, it's about $1 quadrillion. This is a number according to Jesse Myers at Croesus on X, or at Croesus_BTC on X. Most people probably already follow him. You could also see him at onceinthespecies.com. Purely a plug for the source of this data that I'm using now, by the way. Not paid or affiliated with him, just a good buddy of mine. And he provides this data. So Bitcoin's a $2 trillion asset, 2.4 roughly, looking behind me. In a world that's $1 quadrillion in size. So Bitcoin currently represents 0.2% of total global asset value. In addition to that, you have two factors to consider. One being the global equity market is $135 trillion, right? So Bitcoin is still just a little bit over 1% of that. And then bonds are a $318 trillion market. And so Bitcoin is less than 1% of that. And so when you consider the rate at which you'll be able to borrow against Bitcoin at some point in the future, and look at today where we are, the two things to consider are the size of Bitcoin relative to things like the bond market, right? So its liquidity, and its cross-asset correlations. What does the market treat it like? So we'll start with the latter. Bitcoin's cross-asset correlations treat it like a tech stock. Bitcoin is traded like the NASDAQ. It's no secret. Which is kind of insane because Bitcoin's white paper, right? All of its attributes are totally antithetical to a tech stock. A tech stock is infinitely issuable. Obviously, if the board of directors approves of it and public shareholders approve of it, theoretically, a tech stock or any other common stock is infinitely issuable, right? So automatically, that doesn't make it Bitcoin does not fall in that category whatsoever, right? Absolutely scarce, verifiably scarce now until infinity, until the world ends, right? You pair that with Bitcoin's trading profile, right? Tech stocks close over the weekend, right? It's 9 a.m. to 4:30 or 9:30 to 4, right? Whatever, depending on what exchange you're on. And it's only Monday through Friday, excluding holidays. That's again antithetical to Bitcoin's properties. Bitcoin is a 24/7, 365 asset. And once again, you compare that to tech stocks. Bitcoin is currently the fifth largest asset in the world. It might be behind Amazon again to number 6, but either way, we'll say number 5, because this cycle it will surpass Amazon fully and never again fall underneath it. So Bitcoin is currently, it's only behind Nvidia, Microsoft, and Apple in that order, right? So of the big, massive, largest stocks in the world, those being tech stocks, Bitcoin is ranked number 4, right? Bitcoin is growing in size to a point where its monetary properties will finally be allowed to show through and reflected in its market price because of its extremely small size and the people who are trading it. But it's primarily a size thing. Bitcoin has just been grouped in with assets that it has nothing to do with. I believe that over time, because this has been the case, Bitcoin's cross-asset correlations to the stock market, particularly the NASDAQ and the Russell and then the S&P, moving in descending beta, Bitcoin will lose its correlation to those. Its positive correlation to those will gradually wane. And Bitcoin will become the least correlated asset in the history of asset markets. So that's factor number 1. Factor number 2, again, is size. Cross-asset correlation has been our great deal, but what about size? If we're talking about being able to borrow in a market that's highly liquid, I talked about the risk-free rate, the U.S. Treasury market. It's currently, I believe, like $30 trillion or $35 trillion. It could be way off on that. But as far as I know, around $30 or so trillion, largest single asset market in the world. So if we want to gauge a sense of like, okay, when will Bitcoin be, I'll be able to borrow against my Bitcoin at a relatively low rate. Like, take a look at the size of gold for one at $22 trillion. And then take a look at the size of the U.S. Treasury market at about $30 or $35 trillion. As Bitcoin approaches and crosses those two things, or more broadly, as Bitcoin just grows in size to a 5, then 10, then 20, then $50 trillion asset, you'll naturally be able to borrow at a much lower rate because Bitcoin is pristine collateral, right? You can put this thing into a 203 multisig and then liquidate it at any time. It is 24/7, 365, which means that it's callable at any moment, right? You can ask people to post collateral 24/7, 365 if the price falls below or dangerously close to the liquidation level. And then if it falls below, you can instantly liquidate, right? So as a lender, you want to use Bitcoin as collateral because it is so fantastic. But the one thing you have to hedge against is the tremendous price volatility. You're basically asking for this huge markup, this 12, 13, 14%. I believe that as Bitcoin grows to the size of gold, to the size of US Treasuries and beyond, rates will eventually become comparable to those two markets as its price volatility drops and drops and drops. And that risk premium, which causes Bitcoin-backed loans to be such a high rate, will adjust downward as a result.
It's super interesting when we look at individual stocks, and I'm still stunned that we are smaller than some companies. I personally think it's outrageous, and it shows the huge opportunity that lies in exactly that, where I think we will be 10x bigger than the 10 biggest companies combined. And the 10 biggest companies combined are right now roughly 20 trillion dollars, something like that. And it's also funny enough, roughly the market cap of gold. And I've personally really believe that we will be 10x bigger than gold. So to see Bitcoin being smaller than companies, even if it's Apple, even if it's big companies, that's ridiculously early that we're in.
Yeah, no, to me, it's completely ridiculous. Like, Bitcoin being only $2 trillion today is totally ridiculous. Like, we talk about having, you and I are communicating across continents, across thousands of miles of open ocean. And we're doing it on a supercomputer where we have access to AI assistants and large language models that can aggregate basically all of the world's information for us and answer any question we ask with like a 90% confidence interval. And so that all that is to say, we are very high information people, right? Relatively speaking. And the fact that Bitcoin is not priced correctly in this extremely high information world is mind boggling. But for you and for me and for everyone listening, that's the opportunity. Bitcoin is a $100 trillion idea that is currently valued at $2.4 trillion, right? Therein lies the opportunity, right? If you believe, that what I said is true, Bitcoin is a $100 trillion idea, $200 trillion, $500 trillion idea, then Bitcoin is severely underpriced. And that's your edge, right? In a high information world where the world is yet to catch on that Bitcoin is an absolutely scarce monetary property that cannot be changed, that should be the least correlated asset in the world, the apex risk-off property that you want to own in good times and especially in bad, the world hasn't come around to that yet. But you know that, then Bitcoin is severely underpriced, right? By a factor of 100. And so, frankly, that's your edge.
The first time I ever made any money, I got myself from that money a watch. And ever since then, I collect timepieces to remember times where I achieved some milestone. That's why I got the Bitcoin 2025 edition when I went to my first ever American Bitcoin conference. So for me, the Bitcoin watches from Coin Vigilante represents the time that we are living in. For every person that wears a Bitcoin watch, I know they are representing sound money to the outside world. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. I know how big of a hurdle it can be to have self-custody, but it's so freaking important to make that first step. We have to make sure it's as easy and simple as possible. And that's exactly what BitBox did. BitBox created the simplest and the easiest hardware wallet to use to get into self-custody. So get yourself a BitBox down from the link in the description. And when you use code Robin, you even get a 5% discount. The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. And we have right now a summer sale going on for 15% off. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today for $186. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need. George Bodine was on my podcast a few weeks ago, and he said something interesting. He said Bitcoin went from being a small boat or jet ski, something like that, he said, to being an aircraft carrier. So it went to be way bigger, and that's why it moves differently. I think it also ties into what we were saying in the earlier part of the conversation of it just moves around like a jet ski. A small wave came and all of a sudden the jet ski was on its head. And now if a small wave comes, the aircraft carrier is just like laying flat there, and people say like, oh, Bitcoin is boring now. I'm I thought about that recently, and I haven't shared it, but I think the comparison is probably more accurate if we say Bitcoin is kind of the ocean. It's kind of the foundation of everything. And then in the ocean, there are the aircraft carriers, and the aircraft carriers is like Apple. And then there's a small startup that's the jet ski and all those things. But Bitcoin is kind of like the aggregate of everything. Or not right now. Like obviously not right now. Right now we're like still a small asset, like still a small fish in the ocean. But eventually Bitcoin is the foundation. I said that multiple times on the podcast. I think this podcast will be super boring in 10, 20 years because Bitcoin is just the ocean. And
it would be like having a podcast about the US dollar.
Yeah, exactly. I mean, could be interesting, but I won't be interested in it.
Absolutely. I mean, the aircraft carrier analogy, I think, is really helpful because, it allows you to get a sense of where Bitcoin is at relative to other assets. If you want to adjust for the total global asset value, what you could even say is that Bitcoin used to be like a small toy sailboat, right? In 2021, it was a small toy sailboat. And now it is, a normal sailboat, right? A normal size sailboat, big enough for one or two people. It still gets bumped around when there are these massive waves. However, it can hold its own on the open ocean much better. It is much more anti-fragile. It's much more resilient during bumpy waves. The aircraft carriers of the world, I would say right now are the equity market, right? $135 trillion, the bond market, $318 trillion, the market for just money sitting in cash and, sovereign bonds, $129 trillion, and real estate, $370 trillion, right? Those are the aircraft carriers of the world, and Bitcoin being only 0.2% of the global asset value. To me, it's still a little sailboat. But ultimately the realization is that, another way to describe what I just said, Bitcoin is a $100 trillion idea currently valued at $2 trillion, is that Bitcoin is going from a sailboat to an aircraft carrier, right? Ultimately, Bitcoin is meant to be an aircraft carrier, the biggest aircraft carrier of all, but it's still only a sailboat. And so that's your edge. Another way to visualize it is that, Bitcoin is a black hole. This is a very popular one. Bitcoin is a black hole that's sucking away all of the value from these other markets. But I'll adjust that slightly. Bitcoin is a black hole that's siphoning the monetary premium from these other asset classes into itself. What I mean to say is this: Bitcoin was created, and it is the perfect store of value, right? That is its function. That is its chief function. It is also peer-to-peer electronic cash, right? It says it right on the byline of the white paper behind me. But ultimately, it is the perfect store of value. The reason so much capital has flowed into real estate, into bonds, into equities, into art, cars, and collectibles, which is a $27 trillion market for some reason, is because post-1971, all of that monetary capital needed to find a new home, right? Monetary capital that was parked in the dollars, in US dollars, because it was backed by gold, which is a scarce store of value, needed to find a new home once the US dollar departed the gold standard. It was no longer pegged to gold. So that monetary capital took flight. And what has happened since 1971, right? We've had tremendous asset price inflation as a result of monetary debasement, sure, but also people buying things and looking for a home for their money that will just outpace this monetary inflation. It's primarily monetary inflation, but it's also people buying things that aren't stores of value to store their value, right? Namely art, cars, and collectibles. Like, why on earth is that a $27 trillion market? But also real estate. I've run the numbers, and on the low end, real estate, about 33%, 36% of real estate is pure monetary speculative premium. It's not the bricks and mortar or the wood or the roof or whatever, or the land. It's just monetary premium. It's an excess over the value of the stuff itself, because people have fled from other assets and they've purchased real estate to try to hedge themselves. And at the same time, monetary debasement has risen the value of everything. And then on the high end, you're looking at numbers of like 50 or 60 or 70% of global real estate at $370 trillion is just monetary premium. It's value that shouldn't be there. It's the difference between the market value and the intrinsic replacement cost of any given property, whether it's, residential, commercial, agricultural, or anything else. So basically every single one of these markets I just named has a massive monetary premium that's due solely to monetary debasement, but also people parking their capital in imperfect stores of value. Bitcoin being not only absolutely scarce, so it's a hedge against monetary debasement, but also the perfect store of value. It is the black hole that is gradually siphoning away capital from all of these markets. That's not to say that all of these markets won't continue growing. Of course, all of these markets will continue growing on a relative basis to where they used to be because of monetary debasement, right? Seyr thinks that in 21 years, the total global asset value will go from $1 quadrillion to $4 quadrillion. So in that world, every asset market is bigger, but the difference is that Bitcoin takes up a much larger slice of the pie, right? Closing in on 10%, I think, is Seyr's estimate in 21 years. And so that would mean Bitcoin is a $40 trillion market, I believe, something like that. Or closing in on 1%. A $40 trillion market on the low end, right, is one of Seyr's estimates. And so, that would mean a price, if we're talking about $120,000 per Bitcoin today, if we multiply that by 2, that's $240,000 per Bitcoin. If we take that out, multiply it by 10, that's $2.4 million per Bitcoin. Should this occur, right? Should Bitcoin move from just 0.2% to 1% of the total global asset value 21 years from now, if the total global asset value is $4 quadrillion. And so really it's a simple assumption. And that's not even assuming Bitcoin will overtake any of these markets. It's simply saying that Bitcoin will grow in size relative to them. And so, if Bitcoin is a $2.4 million asset in a 4.8 or $2.2 million asset in a $4.2 trillion market, or a $40 trillion market rather, but ultimately that represents 1%, then you can imagine how much higher Bitcoin is going as it sucks the monetary premium out of these other assets. So all that very long-winded way of expanding on your analogy, but I just think it's so helpful to say these things because people say, "Oh, Bitcoin's $120,000." They get unit bias. They go, "How much higher can this thing go?" When in reality, it represents the perfect store of value. It solves the chief problem that asset markets have been trying to solve for the last 54 years, right? That's the value of Bitcoin. And so if you can understand that and you can understand where it's headed because of that, or you can make convictions about where it's headed because of that, then that is your edge.
I couldn't agree more. I love that. And there's so many interesting things in there. First of all, I want to touch a little bit on real estate because I think it's an easy dream to sell people of like, like own your real estate, build your family, the American dream and all those things. But there's like inherent cost to it. And I'm not saying real estate is like a bad asset to own. It can be really good. Like having a dedicated place for your family is amazing. If you see it as a business, can also be profitable, but it's not Bitcoin. It's not savings. And I think a lot of people, as you pointed out, kind of misuses it. And when I ask exchanges and other people that have a lot of insights of like where is the money coming from, because like if people buy Bitcoin, the money comes from somewhere. So either people sell other assets, they buy it with their checks, they are using it as a savings technology, all those things. I think real estate is actually a big bucket of where monetary energy comes to Bitcoin. And there have been at least, I would say, 15 to 20 guests on my podcast already that shared the story how they sold their real estate to buy more Bitcoin. like literally they had all in real estate and now they are all in Bitcoin. So I don't know. What's your take on like real estate and the monetary premium of that flowing slowly in Bitcoin?
Of course, I believe real estate is the single largest market whose value will be siphoned into Bitcoin. And I'll explain the reason why, right? So global real estate is a $370 trillion market, as I mentioned. What we want to do is calculate the monetary premium, right? That will be the first and easiest estimate of how much capital Bitcoin will siphon from real estate over the next several decades. Obviously, it will increase. These are based on today's numbers. Just 2 or 3 years ago, real estate was a $320 trillion market. Now it's $50 trillion larger. Not because $50 trillion of more value has been created in real estate. It's because it's inflated primarily, right? Monetary debasement. So over time, Bitcoin will take up a larger and larger and larger share of real estate because it is the single largest asset market with the biggest monetary premium, right? It is the asset market that has the single or biggest monetary premium inside of it. And there are a couple of ways to calculate this, right? So my mental model for monetary premium boils down to this, right? It is the market value minus the intrinsic replacement cost, right? That is your monetary premium. So whatever the market is valuing this thing at, minus the cost to take the exact same building on the exact same piece of land and rebuild it again, right? That's it, right? Factoring in labor and materials, right? And if you do that in the United States, then you calculate a monetary premium of roughly 35.7%. So essentially, if you extrapolate that out to the entire world, obviously that is a very bare bones calculation. Other factors need to be considered. This is solely for the United States, but for the purposes of this discussion, let's just say that 35.7% of a monetary premium that's in the United States in the real estate market extrapolates out to the entire $370 trillion global real estate market. In that case, the total amount of value in the real estate market that is not in bricks and mortar, is not in land, is not in actual property, is solely in this speculative premium, is $132 trillion. There is another method to calculate this, right? So that's kind of on the low end, right? If we take a look at the CPI-based premium, right? So we can calculate monetary premium another way, and that's essentially taking a U.S. home adjusted for CPI from 1975 to 2025, and then subtracting it from the average actual 2025 U.S. home price. So if you take a home from 1975 and adjust it for CPI to 2025, it would cost $227,520. Obviously, homes were also smaller, right? The average home size right now is 2,000 square feet. It was much smaller, and so more things need to be factored in here. But in reality, if we take this value and we subtract it from the average U.S. home price today, we find that there's a 54.8% premium in U.S. homes. Again, if we extrapolate that out to global real estate, that's $203 trillion, excuse me. And so that's 55% of the market, basically. So if you take a number just somewhere in between those two things, right? You know, between 203 and 132, let's just say 170, right? We take $170 trillion. We say that is the amount of monetary premium in the global real estate market. And you begin to understand, wait a second, real estate is a $200 trillion global market that's currently valued at $370 trillion, right? If there's anything that Bitcoin's great at doing, it's making it show. It's showing that other things that are treated as stores of value are not stores of value. It's done that most recently with crypto, right? This other non-Bitcoin garbage that tried to sell itself as the next Bitcoin or a better Bitcoin for such and such reason. In prior cycles, altcoins rose faster than Bitcoin during bull markets. This is the first market where, on a secular basis, that has not been the case, right? This last week, some altcoins have hit an uptick purely because of news and other things that are completely unrelated to the reason people buy these things. It's pure hype and it will die down. But in reality, Bitcoin has basically shown to the market that the value proposition of this stuff is not a store of value. It is demonstrated that these other assets are imperfect stores of value. And so Bitcoin, being a $2 trillion market, as it grows, the next leg up is surpassing all of the remaining stocks that it's not bigger than yet, right? It will demonstrate by doing that those are imperfect stores of value. And then gold is on the chopping block at $22 trillion. It will pass gold, thereby demonstrating that gold is an imperfect store of value. But all along the way, it's siphoning capital from these other areas where they're proving to be an imperfect store of value, or at least a less competitive store of value to Bitcoin on a relative basis. Bitcoin treasury companies exist to allow capital that's invested in the equity market to be siphoned into Bitcoin, right? And Strategy's preferred stock, Strife, essentially is siphoning capital from the bond market, the $318 trillion global bond market, by offering this preferred stock instrument to primarily fixed income investors who didn't have exposure to Bitcoin whatsoever, thereby siphoning some of the capital from the $318 trillion bond market into BTC. Real estate, in my mind, because the other two are investment markets, people are purchasing those in order to get a rate of return on their capital that's greater than monetary inflation. They are investment markets, right? They are stores of value to a lot of people. Real estate shouldn't be, right? Real estate is a home. It's a place to live in, largely, or it's land to farm on, or it's a building for your company to lease, right? Those are the things that real estate is. It is not an investment, largely. Obviously, there needs to be a profit motive in order to drive building developers to create these buildings and then get cash flow from these buildings, and for a city to receive tax revenue from these buildings. But that said, it's blown way out of proportion. right? You now have Blackstone buying up single family homes in the United States, not because they intend to develop them and turn them into, create massive communities of homes and create new homeowners. They're buying them and just sitting on them, right? And so it's gotten so out of hand that these entities are trying to find an edge by basically buying homes in markets that they think are going to outperform the national average, and then using it as a store of value, right, to speculate on. It's gotten very out of hand. And so Bitcoin essentially collapses the speculative premium that's present in other assets. It's done it with crypto. It's going to do it with gold. It's doing it with equities, and it's starting to do it with bonds. It'll do the exact same thing with real estate. And because real estate, more than any other market, has the largest monetary premium, the largest non-monetary value that exists in its market value, real estate is eventually going to collapse relative to Bitcoin. That's not to say people won't live in homes anymore. That's just to say homes will be more affordable, land will be more affordable, office space will be more affordable, and therefore more abundant. Whereas Bitcoin will actually, during that process, Bitcoin will become the apex store of value that it is. So that's essentially kind of my take on real estate, right? And how much monetary premium exists, what monetary premium is, and how Bitcoin is going to monetize into a $100 trillion, $200 trillion asset because of it.
I love that. And it shows in one specific area how Bitcoin just reprices the whole world. Like we talked about crypto, how it reprices it, and now real estate. And I think it will just do that with everything, and essentially bring the truth back to what actual value is, because people don't misuse other store of values. I mean, they might still do that, but if they do it, they pay for it, because their store of value is worse than Bitcoin. So if you still want to use your home as a store of value, or you want to use your car as a store of value, which people do, they buy old cars that hope to go up in value, and they bring so much money that they might actually do that. And so if you do that, you get punished basically, because if you just put the same money in Bitcoin, you would have done way better. And it's already doing that, and we're already seeing that. I told that story, like, I think 2-3 times on the podcast. I was in the process of getting my first real estate property as a rental property for other people and make money out of it. And I discovered Bitcoin in this was the same period of time, 2020, where I discovered Bitcoin and real estate. And I was like, I will first do this Bitcoin thing. I did not understand like Bitcoin at all, and real estate. I was like, Bitcoin seems easier to get into. And I was like, okay, let's first discover Bitcoin. I had discovered stocks before, and then my next stump was like, okay, I figured out stocks, then Bitcoin, and then after that I will get into real estate. And then I was like, more and more I looked into Bitcoin and also into stocks, and I was like, why wouldn't I put everything in Bitcoin? That's the greatest opportunity that we have in this generation. I was at the time 22 years old, I think, 21, 22 years old. And I was like, why would I fix toilets on a Sunday if I could just be in the greatest store of value that have ever been there? Like, it didn't make sense for me. So Bitcoin kind of saved me from owning real estate. I don't know, safe, but definitely I would have been in real estate without Bitcoin, I guess.
Yeah, and that's a really good way of putting it, right? You're not having to fix toilets on a Sunday. Because the other thing you consider is like, okay, what do we call an asset, right? What is an asset? Is an asset still an asset if it has a litany of liabilities, to alliterate for a moment? If it has a litany of liabilities that are required to be and to continue being an asset, meaning, are those rental properties really an asset if you have a whole host of liabilities, such as the likelihood that tenants might not pay you? What if someone's security deposit doesn't cover the damage that they create? What if you can't rent at a high enough rate in order to become profitable because of the other places around you, and your mortgage rate is so high that if you rent at the going market rate, you're going to lose money on the property. And that doesn't even factor in things like just general property damage and maintenance. Like you said, toilet doesn't work, they call you. Hinges are creaking, or the front door is broken, or they need to replace a lock or something like that. They call you. A broken window, they call you. And all of that adds up. When you're operating on a margin that's like 1% or 2%, And, on this property that you're paying a $2,000 a month mortgage for, you're earning $1,600 a month in rent, or $1,700 a month in rent, or rather the other way around, you're earning $2,000 a month in rent on your $1,700 mortgage. Your margin is $300. That gets eaten up if there's one major accident that happens, right? And so ultimately, do you really want this thing that's going to net you $3,000 over the course of the year in cash flows? Whoop-de-doo. Compared to something that has a 30% compound annual growth rate that you can buy and doesn't have any of these liabilities associated with it, right? Bitcoin is ultimately reminding the world of what an asset actually is. And that is something that you simply buy and you can sit on, right? The greatest assets are the ones that you do not have to maintain. Of course, I'm talking about monetary assets, right? Obviously, a family is a wonderful asset. You have to maintain your relationship with them, right? But in the monetary sense, a great asset is one that you can simply set and forget, right? The reason you invest in the S&P 500 is because you trust the treasury managers and the board of directors to run a profitable company so that you can get dividends and the stock price can go up, right? It's set it and forget it. You don't have to do anything. So why on earth would you buy real estate and consider it a property when it comes with all of these liabilities just to make sure that it stays an asset in your portfolio? It doesn't make sense. And Bitcoin is reminding the world, particularly the real estate world, of what an asset actually is supposed to be.
I compare Bitcoin to I compare real estate to a car, and I'm curious on how you think about my comparison there. When we have cars, you can either own it as just a consumer product and you're like, okay, I'll need a thing to come from A to B and I just buy one. I can also lease it or rent it, like there are different models, and you have to do the calculation what's best for you. That's the first kind of use case for a car. I just need it and I'll get it no matter renting or buying. But then there's also the business case for a car. You buy like 50 cars and you rent it out to people as a business case. That's kind of like, with real estate, you buy a bunch of apartments and homes and you rent it out to people. That's a business, not an investment. I mean, every business is an investment, but it's not a savings vehicle like Bitcoin. It's not a passive investment than the ETF or like in stock or anything like that. You actually have to maintain those things. It's a business at that point. And in the same sense as look at real estate, where I'm like, okay, I need real estate. Like I need place to live. I need a studio, all those things. So I either have to rent it or buy it. And there's different variations to that, but I see it as a consumer product and not as an investment per se. If you rent it, it's definitely not an investment, but also if you buy it, it's more a consumer product. Nobody would look at like, oh, hey, I bought an iPhone. It's an investment. But the weird thing is with real estate, like people look at it as an investment because it has gone up in value because people store their value in there.
Agreed. Yeah. It's the car is a great analogy, right? Because, when I bought my car, when I was 17, I'm 24 now. So 7 years on, it's got 108,000 miles on it. And, it has gone down in value from like $22,000 to $7,000, right? Over these last 7 years. It has depreciated massively. If I wanted to sell this car for anywhere close to the resale value, I would have to put in put in a new engine, put in a new transmission, put in a new battery, which isn't the worst thing, redo the entire interior, redo the entire exterior, replace the tires, right? That's what I would need to do. I would need to put about $12,000 worth of work in to bring it up and sell it anywhere close to what I bought it for, right? It would need to be basically a brand new car. Not to mention the normal maintenance that's required for a vehicle, right? When you buy a vehicle, when I buy a car, I buy it for its utility value. I don't buy it because I'm planning on selling it at some point in the future. I don't buy a car because I'm planning on it to be my retirement account. So why do people buy their house with the intention of it being a retirement account? And further, why on earth do people like Blackstone buy these houses in bulk with the intention of storing value in them, right? When ultimately they require so much maintenance just to keep up. It sounds kind of absurd when you use that car analogy, right? 2 years in, I'm going to replace my engine. I'm going to replace my transmission. I'm going to make sure to get a new paint job. I'm going to replace the interiors. Essentially, when you're owning a home, in order to sell it, in line with the current market value, 10 years, 20 years, 30 years after you buy it, over the time that you're living there, you got to replace the floors. 100%, you got to replace the floors. You got to do 1 or 2 or 3 new paint jobs. If you have vinyl siding, you got to power wash that thing constantly. You're going to get a new driveway. You're going to probably need to get a new mailbox because the neighbors will probably hit it a few times. You might need new garage doors because people will bump into them and create dents. You might need to redo the backyard, frankly, right? You're going to have to build out new rooms. You're probably going to have to rip out that old carpet. You're probably going to have to take down those popcorn ceilings. And so over the life of a homeowner, you are buying this home, let's say for, 400 grand today to become $1.2 million 30 years from now or something like that, maybe even more. You're going to need to put in $500,000 to $600,000 worth of work over your 20, 30 year time as a homeowner in order to make it so that you could sell it for 1.2, right? So ultimately, your total cost in the property plus the utilities you're paying, you're basically completely even. And so it's eating your cash. Ultimately, owning a house means eating your cash. So do you want to own 5 of those or 6 of those or 7 of those or 10 of those? In the same way that you wouldn't own 10 cars and then maintain all of them, you wouldn't own 10 houses and then maintain all of them, right? The opportunity cost of not owning Bitcoin relative to owning real estate and keeping up with all the maintenance it's just too wide to ignore. And you are a fool of a capital allocator if you do not capitalize on that decision. I buy a car because it drives. It gets me from point A to point B. Over the last 54 years, real estate has moved from this kind of utility market into a store of value market that it shouldn't be. Homes should be homes, right? There should be some kind of premium for the area you're living in. There should be a premium for living on Long Island versus living in Detroit, of course. But that speculative premium that exists in homes today is purely because people are using homes not just for the utility value, but for their monetary value, right? Whether you are an institution or an individual, you are using your home as a store of value, whether it's for your portfolio or for your retirement account. And that's not what a home is. And so over time, the car analogy is great because it illustrates that ultimately homes will move back toward their utility value. And Bitcoin will soak up all of that store of value. It'll basically take on the store of value burden that real estate is currently saddling. In the process, making homes more affordable again, making family formation possible again. You mentioned the American dream, making the American dream possible again.
Yeah, and it is also a good thing that you mentioned that premium. That of course, if you have a beautiful home at a lake and it's prime real estate, this has a premium over something. It's like a 1-bedroom apartment in the city. Like a city maybe also has but you get the point. Like there's different premiums to different homes, which is not a store of value premium or monetary premium. It's just like a premium because prime real estate in the same way as an rare, old, in a great conditioned old timer car has also premium to it and has greater value than probably it was produced at or like even bought at in the first place. So there will always be, there's art, as we said before, and all those things. So I think those things will still exist because there's some value to it outside of just storing it. But the main store of value aspect of it will be kind of flushed out of there. And then you do a great job in explaining that. Thank you so much for that.
Yeah, thank you. I appreciate that.
Before we get to the end of the podcast, I noticed that you have a different logo and then last time I think on your wall. So maybe give us some kind of like update of what you have been up to in Bitcoin and what you're kind of building.
For sure. So the sign I had up there before that it was the Bitcoin layer. I'm still at the Bitcoin layer, just behind the scenes, in a much smaller role. The next sign was Thea, which is the sign that we recorded with. I'm still with Thea. Actually, this new company is founded by the same exact co-founding team as Thea. But this new company, Horizon, it's pretty neat. And it folds pretty neatly into what we've been talking about, this monetary premium in real estate. Because Horizon essentially lets homeowners stack Bitcoin using their home equity in a pretty novel way. Generally, when you think of solutions like this, you think of a loan product with interest rates, monthly payments, maybe. Ultimately, Horizon is none of that. You can stack Bitcoin using your home equity without monthly payments, without new debt, without interest, and without term limits. And so essentially, like, you can stack Bitcoin using the money you've already put into your house, without disrupting your lifestyle, right? Instead of doing a HELOC where you have additional monthly payments in addition to your mortgage, which you may already have, you don't have that with Horizon, right? Essentially, the way that it works is much different from any kind of loan product. Essentially, you are selling a capped share of your home's future value in exchange for upfront tax-free cash today to go and buy Bitcoin, right? And so ultimately, if your overarching belief is that your home is going to continue appreciating slower than Bitcoin is, we've basically created a very, very cool, first of its kind in the Bitcoin space way of acting on that belief without disrupting your lifestyle, right? Whether it's with monthly payments or interest charges, or term limits, right? So if you're going to stay in your home for 5 years or 30 years or 50 years, right? We've created a pretty cool solution for that. And it's something I'm so excited to be doing, Robin, because like I'm extremely passionate about this. As Gen Z, I'm 24 years old. Most of my peers have no dream of ever owning a home. And so recognizing just how speculatively overinflated home prices are, it makes me sick to my stomach, and it makes me extremely mad at the authorities that have allowed this to happen. And essentially, we're trying to create one method of correcting that over a long enough period of time, right? By allowing people to kind of arbitrage out of the capital they've put into their home that appreciates by 3% a year, when real monetary inflation is like 7% a year. So they're losing money by keeping it in their home. By allowing people to arbitrage out of that into an asset that's currently a 30% 2-year CAGR, 3-year CAGR, 4-year compound annual growth rate. Essentially, we're doing two things. We're making it so that A, your retirement doesn't have to be your home. Your home doesn't have to be your retirement account. Well, we're doing three things. B, it helps a lot of homeowners, particularly given the average home price in the United States, finally reach one Bitcoin, right? And C, over a long enough time horizon, pun intended, I hope that Horizon will be one part of a much larger equation that will siphon the monetary premium out of real estate and into Bitcoin. We believe this is one of the reasons I believe that real estate is going to be the largest market that collapses relative to Bitcoin and collapses from its monetary value, its market value into its utility value, is because of how much this thing has been speculated into infinity. So Horizon is just, the aim is to be just one small company in that big equation that helps facilitate that in the United States, but also broadly, right? One company of many that's kind of helping facilitate this transfer. That's what I'm working on now.
Yeah, I just wanted to say before you said the last point, it was like, yeah, you're helping unlock trapped capital in real estate flowing directly into Bitcoin. And that's amazing. I like that. I like seeing instruments and tools and flows from other assets to Bitcoin. Obviously, as a Bitcoin podcaster, I like to see that.
Yeah. If we, there's $35.1 trillion of home equity in the United States, which is almost 10% of the global asset value. And that's just equity, right? Almost 10% of the global real estate market is in U.S. home equity alone. And so Horizon isn't available in all 50 states. But like if we can launch in all 50 states, if a product like this would be available in all 50 states, a product like this in and of itself alone could help Bitcoin add a few $1 trillion to its market cap alone. Again, that's purely U.S. home equity. We're not available in all 50 states. You can't draw 100% of your equity out and put it into Bitcoin. But that said, like over time, as this product gets used more, and potentially we can change up our terms. We mentioned earlier, like the way Bitcoin-backed loans become less expensive is that Bitcoin becomes a larger asset. In the same way, the way that a product like this gets more favorable terms in the sense that you could draw out more equity is that this product becomes more popular, but also Bitcoin grows larger. It's really just a fun time to be alive. It's a fun company to be working on because like the notion of being able to make homes affordable again at the same time is allowing homeowners to mobilize that $35 trillion of trapped capital and siphon it into BTC. It's extremely exciting.
I love that. Really cool. We have one question that I asked each and every one of my returning guests. And the question is, what have you learned outside of Bitcoin since your last appearance on the podcast?
Oh man, what have I learned outside of Bitcoin? I had an inkling of this before, but I've learned this now more than ever, that time is true wealth. Ultimately, the reason we care so much about Bitcoin is because obviously it fixes a broken system, but it's fixing a broken system that has robbed us of our time. And time is true freedom. Time is true wealth, right? The ability to have your time and be able to do with it what you want, right? I'm a Christian man, and the thing that I pray every night is that the Lord just use me to provide as much value as I possibly can, right? In whatever way that he sees fit. In the way that, ultimately we're all called to do something, right? We're called to glorify him, but we're called to do something. And you have more time to pursue whatever you were put on this planet to do when you have your time back, right? Everyone's time is being stolen from them. The thing that I've learned more than ever over the last, I think, 6, 7 months, 8 months since I've been on, is that time is true wealth. That is the one thing that more people should be prioritizing. And that's one thing that I've grown into. And so ultimately, Bitcoin is a tool that allows you to steal back the time that has been stolen from you so that you can pursue what you're truly passionate about on this planet.
I love that. And I love how every guest brings it back to Bitcoin. Really cool. Before we have our end routine in the podcast, as you know, where a previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you a question that fits really nicely with the podcast, because we earlier said about an information gap that is out there and how it's crazy that we have AI and we have all those things, but still so many people don't buy Bitcoin. And the question from the previous guest is, why is orange pilling so difficult?
Orange pilling is extremely difficult because I'll use this analogy. And I saw a tweet about this. I think it was Jesse Myers. Again, right? Great dude. If you're not following him on X, you should be. But it was something to the tune of, when you walk down actually it was Sonny Poe. So Sonny Poe said this: when you walk down the street in Manhattan, right? Let's say you're in Times Square. You pull a random person aside and you point at a building and say, did you know that every single building here is worth $10 million at least? They'll go, I didn't know that. Cool. And they'll walk away. They don't care, right? They genuinely don't care. And so, Bitcoin's at $120,000. People don't care, right? People cared about it when there was this notion of like, oh, I can make money overnight instantly, right? By buying the next Bitcoin. Now that that's largely gone, people don't care. People don't care that, the size of the US dollar, its total global reach, like, the total supply of global money supply, right? Denominated in US dollars is like 25 or 30 trillion dollars, or excuse me, like, 100 trillion something dollars. No one cares, right? And so I think that that's one of the main things. And then also it's people arrive at Bitcoin like because it solves a problem that they have, or they're drawn to it because of some event that happens in their life. I know I certainly wasn't drawn to Bitcoin because somebody told me about it and I immediately became an overnight believer. Something happened in my life that drove me to BTC. So, for me, it was getting kicked out of school in the middle of COVID, in the middle of spring break because COVID hit, right? COVID decided to shut down our university. I was away for spring break. I got pretty mad, right? Because I'm like, how can one authority wield this much power? And that over time drove me into Bitcoin, right? Over the next couple of months. Something happens, generally speaking, in people's life that drives them to BTC. It's generally not someone telling somebody else about it. It's somewhat off-putting. I'll say the only two people I've been able to orange pill in my life are my mother and my fiance, right? And that's just because they see me doing it all day long. They see me talking about it all day long. It just makes sense, right? Because now Bitcoin exists in the context of the world that they live in, and they start to view Bitcoin as a solution to those problems that they see. And so it takes a lot of time, and they have to come to it on their own terms, right? Ultimately, it's not a product to be sold. It's not a solution to be sold. It's a solution that they have to come to naturally by knowing about it. And that's your job as an orange pillar. And then seeing it in the context of the problems that they witness on a daily basis, and then naturally coming to the conclusion that Bitcoin solves a lot of them. Yeah, it's difficult because A, most people don't care, and then B, the people that may care, it takes a lot of time. That's why it's so hard.
I agree. It's not easy, and I've noticed, and you probably have noticed the same thing as you said with fiance and the mother. The people that are closest to me in my family get it the best. Mm-hmm. So my girlfriend, she's been with me now about 2 years, and in the beginning she was not opposed to Bitcoin, but she was like, I will save in something else, so we'll have a diversified family stake. Now she is doing everything in Bitcoin. What happened in the 2 years? She just got exposed forcefully because I do so many podcasts. So she listens to it sometimes when I do podcasts, and oh gosh, I almost killed my light here. When I record podcasts here, she's in the next room and hears all of it, and she gets forced fed because she lives with a Bitcoiner, a bunch of Bitcoin content. So she got to be a Bitcoiner just by listening and passively doing it, and now she's reading Bitcoin books. She's actually sometimes at conferences, and this showed me that the only thing people need is information and education, but they don't want to consume that. So you kind of have to wait till they're open to consume content, and then you just have to be there as an educator. And my learning is like, if people are exposed to Bitcoin education, they will get Bitcoin. If they don't have an agenda against Bitcoin, as like some gold people and like other people have. But if you don't have an agenda against Bitcoin, it's pretty straightforward why it's a good deal.
Yeah, absolutely agreed. Yeah.
Before I let you go, where can people find you and ask you questions? Maybe also where can people find Horizon?
Yeah, absolutely. Robin, again, thanks so much for having me on. Always a blast to record with you. I always love the way these conversations flow. If you want to find more of my work, to everyone listening or watching, you can find me at Joe Consorti on X, the exact same way it's spelled here. If you're watching on YouTube, at Joe Consorti on YouTube as well. Started posting my X content on YouTube, so a subscription over there would mean a whole lot. You could also figure out, you could find out more about Horizon at joinhorizon.com.
Awesome. Thank you so much, Joe, for being on. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye. This content is for educational and entertainment purposes only and does not constitute financial advice.